Welcome to The Explainer. Today, we are cracking the code on something that honestly feels like a superpower for any professional out there, and that's the ability to really decode a company's true financial health. Let's jump right in.
It's the big question, right? You see a company making headlines, maybe you're thinking about investing, or you just want to understand your own company a little better. How do you really get past all the noise and see what's actually going on under the hood?
And let's be real. For most of us, opening up a financial report can feel exactly like this, a deliberate obfuscation of critical information. It just looks like this dense, complicated wall of numbers that's designed to confuse you, not to help you.
But what if we just looked at them in a totally different way? What if these documents weren't a wall of numbers at all, but were actually chapters of a story? A narrative that, once you learn the language, tells you pretty much everything you need to know about where a company has been, where it is now, and maybe even where it's going. So in this explainer, we're going to walk through that story chapter by chapter. We'll start by setting the stage with a company's financial story. Then we'll dig into the balance sheet snapshot, the income statement's plot. Then we'll do some detective work by tracking the cash flow. And finally, we'll put it all together with the complete annual report. All right, let's kick things off with our first big document, the balance sheet snapshot. And the name really says it all. The best way to think about this is like a financial photograph. It captures a company's entire financial position, but only for one single specific moment in time. So, the official definition says the balance sheet conveys the book value of a company. All that means is it lists out three key things: its assets, its liabilities, and the owner's equity. Just think of it as a complete inventory of everything on one specific day. And you know what's so cool about this is that all that complexity, all those numbers, they're all held together by one beautifully simple and incredibly powerful equation. This thing is the absolute bedrock of all accounting. And here it is. Assets equals liabilities plus owner's equity. So on one side, you've got assets. That's everything the company owns that has value, like cash, inventory, buildings. And on the other side, you've got how all that stuff was paid for. It was either through liabilities, which is money the company owes to other people, like a bank loan, or with owner's equity, which is the money that's been invested by shareholders. And here's the magic part. It always has to balance. Okay, on to Chapter 2, the income statement's plot. So, if the balance sheet was a still photo, the income statement, well, that's the movie. It tells you the story of what happened between those photo snapshots, showing how a company performed over a period of time, like a quarter or a whole year. And the big central question the income statement is trying to answer is this one. Is this company actually making any money? You'll often hear people call it the P&L for profit and loss, and its whole job is to get to that famous bottom line. And it's really a journey from the top of the page to the bottom. You start at the top with revenue. That's all the money coming in from sales. Then you subtract the cost of goods sold, basically what it cost you to make the stuff you sold, and that gets you to gross profit. Next, you subtract all the other operating expenses, things like salaries and rent, to get your operating income. And finally, after you pay your taxes, you arrive at the bottom line, net income. And that, right there, is your profit. All right, now for our third statement. This one is like a detective's ledger. The cash flow statement is so important because it tracks where the cold, hard cash actually went. See, profit is one thing, but cash is what keeps the lights on. So it breaks down all the cash movement into three main buckets. First up, operating activities. This is cash from the day-to-day business of selling stuff. Second, you've got investing activities. This is cash used to buy or sell big long-term assets, like a new building. And a negative number here isn't necessarily bad. It could just mean the company is investing in its future. And third, there's financing activities, which tracks cash from things like taking out loans or selling stock.
Okay, so this is a really crucial point, understanding the difference here. Profit is, well, it's an accounting idea. It's what's left on paper after you subtract expenses from revenues. But cash flow, that's all about liquidity. It's the actual money moving into and out of the company's bank account. And believe it or not, a company can look really profitable on its income statement, but still run out of cash and go bankrupt.
And that's exactly why so many experts are looking for this one key signal, a positive cash flow, because it speaks volumes about a company's real financial stability and its ability to grow. Ideally, what you really want to see is that the cash from operations is routinely higher than the net income. That is the sign of a truly healthy, self-sustaining business. So we've got our snapshot, we've got our movie, and we've got our detective's ledger. Now it's time to bring it all home with the annual report, which gives us the full story with all the missing context. The annual report is where the numbers finally meet the narrative. It's got the balance sheet, the income statement, and the cash flow statement. But it also has things like a letter from the CEO, management's own discussion of how the year went, and their vision for the future. And if you really want to go deep, public companies also file a much more detailed 10K report with the SEC.
And when you put it all together, the story reveals some incredibly powerful stuff. You can see all of a company's debts and get a real sense of whether they can actually pay them back. You can track profits over time to see if they're growing or shrinking. You can figure out how much investment is needed to keep the company growing and see if they're spending their money wisely.
And that right there is the ultimate takeaway. No single one of these statements tells you the whole story. The balance sheet by itself is just a static moment. The income statement can even be a bit misleading if you don't look at the cash flow. The true value, the real understanding, it comes from the story they tell when you look at them all together.
So, you now have the decoder ring. You know the language, you know how to read the different chapters of a company's financial story. The only question left is, what company's finances are you going to decode first? We really hope this gives you the confidence to start digging in on your own. That's all for this explainer. If you found it useful, hey, don't forget to subscribe, like, comment, and share. We will see you next time.